morning, everyone, and welcome to the Fairmont, the Norfolk. It's a pleasure to be here today amongst so many friends. Actually, as I was standing outside, I thought I knew nearly everyone here. And David, of course, Cynthia, many others. It's a pleasure to be here. I would first of all just like to appreciate all of you being here. And secondly, I would like to ask Terry Adambeza, who's the Manager for Product Development at the Nairobi Securities Exchange, to come and give us a bit of a situational analysis as to where we are and an introduction. Thank you, Terry. Thank you.
Morning, everyone. I hope you're enjoying your breakfast. We are happy to be here today. We, as NSE, maybe some quick introductions. Godfrey, probably most of you have dealt with Godfrey. Godfrey handles information services at the exchange, so any data, any information you want from the exchange, your requests will probably be routed to Godfrey. And there's of course all these huge database of data that we have seated at the exchange, so a lot of back data. So he's a go-to guy if you want data from the exchange. And of course, you know Ali and Nishet from Reach, good people to know. We as exchange are doing, I think this is like the third or fourth time we are bringing analysts together. A year or two ago we decided to sort of have a forum where analysts could sit and share some thoughts together. And of course would get some feedback from yourselves on the kind of stuff that you'd want to see from the exchange. So this is part of that initiative. The intention was to try and do this quarterly. Of course, it's been quite a busy year. We weren't able to do it as often as we wanted. A few of the things happening at the exchange, you know, we're in transition on the leadership. We think we should be able to get someone new by the end of the year. But Andrew Ashira is acting. Andrew was previously the head of, well, he was the head of legal and compliance at the exchange. We have, of course, been saying that there are a number of things we wanted to roll out. The Real Estate Investment Trust, we received our approval last week from CMA, so we're just ensuring the system is ready, and hopefully we should get some listings. My initial projections for the year was that we'd get 4 to 5 REITs listed, but we're looking like we're getting towards the end of the year. I'm not very sure if we'll meet that, but I know there are some live transactions on the REIT space. We have had a discussion with CMA on exchange traded funds. We have agreed on a guiding policy framework for the issuance of ETFs, which has been approved by the CMA board as well. So around the same time, we think also we should be able to ensure that the system is ready. And we've seen interest as well, probably 4 to 5 potential issuers on the ETF space. But I think because we are getting to the end of the year, we probably, a number of them will probably put out their issues in the first quarter. On the derivatives, we've spoken quite a bit about the derivatives market. We are still working on the application with CMA. We've agreed on the rule book. Last week I took a team from CMA to South Africa to see how the market operates down there. So we are hoping to get an approval before the end of the year as well. Of course, we have said that we want to put out the currency futures, we want to put out equity and single stock futures as a start. And then we can get a bit more adventurous once we see how those perform. Of course, all of that is supported by a robust system. We're in the process of upgrading the system, which will take us about a year, I think. We've already identified a new service provider, well, the existing provider. So we're getting a new version of the system. The CDSC is also upgrading its system. So we think on the tech space, the new investment should be able to support what we're trying to do. But that's just a bit of the stuff happening at the exchange. As I said, this really is a forum to bring analysts together to discuss how we can ramp up the quality of work, the quality of reports that we're getting from the market, but also to get feedback from yourselves on the kind of data, information that you'd like to see from the exchange or from the listed companies, and the kind of help you'd need to talk to the listed companies. We are happy David is here. We are really trying to get the IR desks at the listed companies open for yourselves. So we keep encouraging the listed firms to talk to yourselves. I was just forgetting, I forgot to mention GEMS. We are processing a number of applications. We have 2 that are about done. You must have seen quite a bit of press coverage around that. And we know of 3 other transactions that are live as well. And all 5 are projecting to do their introductions before the end of the year. Which for myself, of course, I know starting the year I was very adamant that I wouldn't see any listings on the main board except for the exchange, and so this is just reflective of what I'd projected. We have had an offer from Thomson Reuters, who have a new strategy for this market. They appointed a new head, and they would like to do quite a bit more on the capital market space. TR has been active on the treasury desks, so they would like to do a bit more with yourselves. So we would probably have another session in which they'll come and speak to yourselves. In the time being, they would like to offer the messaging service to yourselves free of charge. So anyone who's interested, please leave your name and contacts with Godfrey, and then we'll ask TR to get in touch with yourselves. Ali, this is a bit where I invite you. Karibu, and everyone Karibu. Thank you very much.
Thank you, Terry, for that introduction. I think it's worth just remembering, and for me, I remember when I first came back to Nairobi many years later, going to Nation House, trading off a single blackboard, practically, that used to be in front of us. I remember one of the predecessors of Peter Mwangi at the stock exchange asking me to become a data vendor many years ago. And I think it makes me proud to look at where we are today and to hear Terry speak about the strides that the stock exchange, the securities exchange, has made. I also remember lots of issues that we had when the market collapsed in 2007, 2008. And I think, you know, I wish to commend the NSE for having brought the capital markets this far, and to commend you on what I think is a really exciting time now, and hopefully a tipping point for East African capital markets. So that's the first thing I'd like to say. When Godfrey, my friend over there, asked me to come and speak today, you know, there's so many things we can talk about, and I hope a lot of those questions come out in the question and answer session. But I'm going to speak generically to begin with about where I think the economy is, what is changing, what I call the arrival of the information century. And what I mean by that is that this information century makes information, in my opinion, the most valuable commodity of all. And how do you, as an analyst, operate in this new information environment where the world is flat, where you put out a good report, someone might pick it up in New York, someone might pick it up in Tokyo, and suddenly your audience is not people in this room, it's not people in this country, it is actually the whole world who are more and more interested and excited about frontier markets. When I was thinking about the title, it took me back to this phrase, which is called staying ahead of the curve. George Soros wrote this book called Soros on Soros, Staying Ahead of the Curve. And what he was describing was the yield curve. And what he was saying is that, that as an analyst or somebody, and I'm using the yield curve as a proxy of whether you're analyzing stocks or whether you're analyzing the macroeconomics of this region. To me, the key thing for all of you is to stay ahead of the curve. It is no good being behind it. And I think that is the first issue that, I think from an analyst's point of view, is the first and main challenge. How do you stay ahead of the curve? How do you operate in this new information world? How do you make your information count, your analysis count? Wayne Gretzky, who is a very famous ice hockey player, said, I skate to where the puck is going to be, not where it has been. And again, if I look back at our history, if you look at the NSE, we are looking forward now. We're looking at ETFs, we're looking at REITs, we're looking at GEMs. This is materially different, a materially different landscape to the one that we have been used to and that we have had before. I don't know if any of you have read this book by Malcolm Gladwell, but it's really one of the most extraordinary books I've ever read. And it's basically about how do you create performance for yourself as an individual and then for your organization. And his theory is that if you look at the most successful people in the world, they have created excellence, and his tipping point is 10,000 hours. And I think, what the point I'm trying to make is that actually, nothing's going to come without doing the hard graft, because otherwise you're never going to put yourself in a position of being able to analyze something better than everybody else. And he claims that greatness requires enormous time, and he gives a number of examples. One is the Beatles, who played in Hamburg before they became famous, and it basically played 10,000 hours of music before they came back and then became extremely successful. And his point was that they were not coming from out of nowhere. They were coming out of this sort of hothouse of practice where they'd created excellence for themselves. And he also uses the example of Bill Gates. And he says that Bill Gates basically, I don't know where Bill Gates was born, but wherever he was born, at that time there were about 5 big PCs in the whole of North America. And he was next to a university which had one of these PCs. And he used to go there on a Friday night and he'd come back home on Sunday evening. And during that period when he was extremely young, age 13, he'd spent 10,000 hours programming before anyone else had even spent 10 hours or 20 hours. So I think the first point, really the big point I'm making is, unless you're kicking the tires, unless you're immersed in it, unless you're passionate about it, I think these are the building blocks to build excellence in what you guys are looking to do. Now, talking about, the period we're living in, I think it's, I'm 48, I'm going to turn 49 this year. I'm from Mombasa. And, I remember a time when we all had one phone. Few of us had a phone, the one that used to ring. I think there were 15,000 phones just over 10, 15 years ago. If you look back and then you look at where we are today, I describe this moment as a Schumpeter moment. Schumpeter is a very well-known, very interesting economist who's turned out to be very prescient about the way he looked at the world. And what he was talking about was capitalism, and Schumpeter was saying, capitalism is all about change. It's about the velocity of change. And right now, I think, we exist in an environment which is extremely, where change is happening so fast. where it is about speed, whether it's about speed of trading. You know, the whole businesses have been built on hardware power, the ability to get to the market first before everybody else. You look at the world around us, I mean, you put on the news and things have changed overnight. So we're dealing as analysts with a lot more fluidity, a lot more things happening around us that we cannot analyze it in a static manner, you know, because things will change dramatically from a few months ago to now. You know, let's take an example of something which is extreme and is impacting Africa, something like Ebola. How do we measure the risk of Ebola, to businesses? You know, what happens when instead of the cabinet secretary denying or saying that this was not an Ebola case, that the news comes out that there is an Ebola case? I'm just giving you examples of the sorts of things that we need to consider and the sort of period that I think we're living in. Of course, everyone talks about the mobile phone, and I think it was a silver bullet for 1 billion Africans, 1 billion of us. And what do I mean by that is, if I can just quickly divert slightly and give an example. You know, when we came back to Nairobi 8 years ago, we were driving along and our car broke down just outside Matito Ende. It was about 6:15, 6:30 in the evening, and this boy came up to me and started talking to me, very young boy. And whilst he was talking to me, he said to me, you know, I learned Latin. And I did Latin myself at school here in Nairobi, in Kileleshwa. And I tested him and he knew Latin. He taught himself. And I said, how did you learn? He said somebody had given him some books. 10 years ago, that boy was stuck in Matito Ende. Nothing, he could not contribute to the global economy. Today, I don't know where he is, and I wish I'd taken his details. But, you know, I think that today he has a chance. The mobile phone, the internet on that phone, has given him a chance to participate in the global economy. And I think in that regard, the mobile phone was really revolutionary. Just sticking with what is this new information economy I'm talking about, McKinsey called it IGDP, the internet component of a country's GDP, and taking into account 4 major categories: private consumption, public expenditure, private investment, and trade balance. And they found Kenya and Senegal, and I haven't gone to check Senegal because they've got Senegal higher than us. I'm quite surprised at that. And this is comparable to France and Germany for the size of economy we're in. South Africa and Nigeria, about which everyone is so excited, particularly when they come to Africa, have an IGDP component which is half and more than half, or less than half, the size of ours. And to me, that tells me that's telling us very clearly where this economy in East Africa has gone, and why it is so exciting is that it is not just about what you can dig up out of the ground. This is the infrastructure to make the people who walk upon the ground perform better and contribute more to the economy. And you see this in things like Kenya bandwidth data. If I can just touch on this before I go into the analysis side. We've had a huge surge. We're the most bandwidth-rich country in the whole of Africa today, and that includes North Africa. It's pretty dramatic stuff when you think back to 10 years ago, that in order for me to trade oil, I built a 170-foot tower in Mombasa, which cost me $7,000 to get a 32K connection, which I then realized I could not trade off because it was just too slow. And today I've got that times 5, times 10 on my mobile phone. That to me is a revolution. And it's a revolution for the financial markets as I see it here in Kenya as well. Social media, of course, is a lead indicator. If you look at the activity, that you know, it's a great proxy for confirmation of what I'm talking about. Now, coming to the continent, of course, I think, you know, it's never going to be linear. I think no one expects it to be linear in the way you know, you find linearity in the developed markets. You know, I remember trading short-term interest rates in Europe, and you know, moves you would be looking for would be 10, 20, 30 basis points. You were a genius if you could get 30, 40 basis points. you know, we're in a different environment. We're in what I would call non-linear environment. Opportunities of success and failure are magnified, and I think that's important to note, and it's important in informing the way that we present the analysis that we're presenting. One of the people I admire enormously was a guy called Stanley Druckenmiller, who was George Soros's partner. And of course, you know, they bet the bank against the Bank of England. And that was the first time I'd really got on the trading floor at Credit Suisse, and I saw this all happen in real time. And the traders around me were trading on the bet. So it's a memory I can never forget, because it was pretty remarkable. And they made about £1 billion, because they basically worked out that the exchange rate of the pound was incorrect, that the government could not support it, and they just went in and started selling the pound. And basically during the day the Bank of England tried to stop them, tried to intervene, and then by the evening gave up. And they'd made themselves £1 billion in the space of 24 hours. And you know, he was saying, he says this, as a macro investor, and change that word for analyst, because I think this is the best description that I've heard anyone give me about what we're all trying to do in this room. My job for 30 years was to anticipate changes in the economic trends that were not expected by others, and therefore not yet reflected in securities prices. Ultimately, that's what I think we're all trying to do. We're trying to forecast, to look forward, to understand, and we're sitting in positions which give us a unique insight in order to do this. And I think that, to me, is really worth its weight in gold in what he's trying to say. So this new normal I've described, you know, how do you guys in this room excel in this new normal? So the first thing I would say is information is traveling to all corners of the world. Do not make the mistake to think that I'm going to put my name on this and it's going to dive off a cliff and no one's going to hear about it again. They can. There's a trail. This is an opportunity as well as a downside risk for us, right? You know, sometimes we might be sitting there and coming under pressure to say something or do something. Bear in mind that it's a public timeline practically these days, right? I mean, you know, we're not operating in a vacuum. What you're saying can go anywhere in the world, point one. And that we still exist in what I would call an asymmetric landscape. Information does not flow freely, right, in Africa. This is one of the challenges, whether you're a multinational, a CEO, you know, the information that you have on your dashboard is fundamentally different to what somebody might have at Google or at another organization such as that. But that is also a big opportunity, because in such a landscape, people who can get up close and personal, like we all do, like today I'm sitting talking to Terry and Terry's telling me, Ali Khan, have a look at something, and I'm going to have a look at it. And that was pure, that's what I describe as that was a situation where by being up close and personal, I'm understanding something better than other people might understand it. And I think that is the insight that you as individuals need to nurture, right? So you have a level of information which no one else can have, and you continue to nurture that level of information, because it's going to translate into quality output and a quality salary for yourselves, and even to a point of, and I think the main thing about research and analysis, because I come from a trading background, is making it actionable, right? Think about what is actionable, whether it's you understand that this company, the accounts are not as solid as they should be, or they are solid, or there's a story behind it which is better than maybe the market understands. Those are the opportunities you're looking for. And when you get to those opportunities, you want people to know, you want to have your name on it, because that's when it's going to make your reputation. And I think, you know, being up close and personal in Africa gives us a unique advantage. I'll give you another example. I meet lots of people who come in here once every 2 months. Ali Khan, I got to see you, got to see. They'll go through everybody in 48 hours and they'll go back. You have a much better advantage than they do, right? I meet some people and they're going to see someone like Joshua once every 2 months. David, you can pick up the phone. We can pick up the phone to these people. We can understand better. We can have deeper insights. The question is, how do we convert those deeper insights so that they resonate for ourselves, for our organization, and across the world? And then, you know, people often tell me, you know, I'm working for somebody, but that research that you're putting out is your brand. Whether you're sitting at the stock exchange, Terry's at the stock exchange, next day he's at some other place, this is Terry, this is his brand. You've got to nurture it like it's your brand. Therefore, the quality has got to be of a consistency on a consistent basis, in my view. And then the final point I think that makes a huge difference is what I would call action, call to action. You know, there are billions and billions of dollars moving around the global system, right? What has driven up our stock markets in the last 3 years is because the frontier index is not that big when you compare it to emerging markets. It's actually quite small. And it's in a little bit of a sweet spot because people continue to move money into that. If you look at things like the emerging market index since 2012 and you look at the frontier index has outperformed by about, I think, nearly 30 percentage points. Why is that happening? What is going on? What it's telling me is that there's a lot of capital out there which still wants to come into the frontier because the frontier is seen as less correlated with developed markets. It's seen as an opportunity where you can make better returns. And in fact, people believe it now. It's not we're not flogging a dead horse. We're selling something that everybody currently believes in. That's why the money flow is coming in that way. Great book I read years ago, and if you ever get a chance, and he probably has it in Yaya, it's written in about 1930s. It's by a guy called Edwin Lefebvre. It's called Reminiscences of a Stock Market Operator. Brilliant book. Even today, it applies to things today. And in that book, he says, you know, at the end of the day, the tape, what the price action, the movement of prices is what it's all about. And if that's the case, if you want to tap into these flows, you want to be a player in the frontier, then I think you've also got to be actionable. You know, if you're coming up with a suggestion, you know, I think this is a good trade. I think it's explain to people how they do the trade, and that's the place to go, because I think you've always got to, you've got to cross over from academia into the trading world, because that at the end of the day pays all our bills. You know, no one can afford an analyst if they're not making some money, right? So think also of that, because you've also got a lot of sort of actionable driven analysis coming out externally. So we've got to push back against that as well. And I think I'm going to go to questions and answers, but I think, you know, this is a fantastic moment for all of us. I really do. We have these laboratory conditions in Kenya, which is, I was talking about the internet, the IGDP. Now, how do we operate? I think we've got to systemize all this complexity, this asymmetry. We've got to specialize in certain areas. I find macroeconomics and geopolitics interesting. That's my natural interest. You know, therefore I sort of move. That's why I found oil interesting, because so much of oil is driven by geopolitics, you know, particularly in the Middle East. But find your passion, because the moment you find something that you're passionate about, you're interested about, you are already ahead of everybody else, because you're more interested in it. Do a Gretzky. You know, don't think about what's happened. Looking forward. Try and look forward. Another guy whose quote I like a lot is, who's the guy, the future? Vinod Khosla. Vinod Khosla was the guy who was one of the founders of Sun Microsystems. In 1992, when I first got to the trading floor, every computer was a Sun computer. It was the first big data crunching PC that could do tremendous amounts of work in a very short time. And he made about $1 billion. He's on Twitter. You can find him on Twitter. And he said, you know, the future is not seen in the rearview mirror. And I think we're at this moment when that really applies. The future is something so different to what it was 8 years ago, when I used to sit and nearly die of heat because there were so many people, no air conditioning. Do you remember, Terry? And you couldn't breathe in there. And it's changing so dramatically. And that's why I think it's all about being ahead of the curve. And being ahead of that curve is going to give you all supernormal returns to your people who are listening to you, to yourself as an individual, and in terms of to your brand. Because we're now in a whole new 21st century where it is about consistency. It's about this digital trail that people have of you. You know, make sure your name is on the ticket. Quite often, if I have a very strong conviction, I'll write it in the Star so I can get a timestamp, right? I will say, I think oil is going to fall dramatically. I think there's a lot happening there. But it's no point me just saying that in a room of 16 people. I want to say that to as many people as possible because I have a supreme conviction about it right now. I think the same about the dollar. I think the dollar's going to rally big. I want to put people into those trades. I want people to come back to me and say, okay, we made some money here. How do we operate now and move forward? So that is my sort of short message. And I'm happy to take more detailed questions. I didn't want to put up too much detail around the stock exchange here, but obviously there are lots of issues that we can talk about, and I'm happy to take any questions from anyone. Thank you so much. You know, if you look at also within organizations now at the NSE, right, there's what I would call a bifurcation. You've got like companies like KCB, Safaricom, who are having to operate to the highest global standard, right? No one's interested when David or Joshua is walking through and meeting fund managers anywhere in the world. They're meeting fund managers from all over the world. In order to play on that pitch, it's like being a football player. You know, it's like coming out at Old Trafford. It doesn't matter where you came from. No one's interested. People are interested, what are you going to do on the pitch right here? It's irrelevant. If you are from Senegal, you're from Kenya, you're from Timbuktu, no one cares. It's what you're going to do on performance on the pitch. And I think what's interesting, what's happened is what I would call a bifurcation between companies that are holding themselves to that standard and companies which have not yet made that jump, of which there are a number. And also that is now translating into discounts. If you're not making that jump, people are not as confident in what you're telling them about what you're going to be doing. And I think that is actually translating into a discount on share prices. And you can see that in particular in some very extreme cases where all credibility is gone. You know, I'm wondering, what will it take Mumias to say and do that will turn that stock around? Because the credibility is now so low that even if someone came in with a fantastic plan, would the investing community listen? And that's what I mean by the bifurcation, right? You can see that's gone there, and there are a couple of others, and then you can see others have gone in that direction. So from the point of view of someone like David, who's in-house and who's doing his investor relations from there, it's a different world as well to what we were used to 5 or 10 years ago. I remember 4 or 5 years ago, Martin telling me, we're going into a meeting and they said, oh, you exist? They couldn't believe. They said they'd never seen Martin, who was then the CEO of KCB. So that's just another point I wanted to make. But I'm happy to take any questions about anything in particular.
My name is Chris Groon from Barani Capital. It's a local firm here doing corporate finance advisory. And I want to ask, can you tell us a little more about what you're doing now and about rich management? And then also, second question, how do you see the development of the fixed income markets here relative to the equity markets?
Okay. So first of all, just to situate myself better, you know, I ran trading desks in London until I was age 40. I ran what are called short-end trading desks, which is about out to 3 years maturity. So anything that was up to 3 years, whether it was a short-term bond or treasury bills, And in those days, we financed a lot of hedge funds, and we used to lend money to hedge funds against collateral. So we really operated in the short end of the market. We traded across the world. When I came back, the initial, I believed that Africa was going to take off. I wanted to be back. I didn't want to be sitting at a desk in London. And my business grew, in the first 2 years, I was mostly proprietary trading. I was trading my own money. And then I moved into what is, Gori Kambi asked me to do some data vending, so I created a website. I had people abroad who were saying, sure, we'll invest in Africa, but just give us something that looks like what we would see in London, bid offer, size, so we can better understand what the market's going on. So I have 3 businesses at the moment. One is really looking after people's money, all in listed securities. I don't operate in the private equity market. Looking a little bit at that. We do an investor relations business. We have an investor which is assisting people in speaking to the right shareholders, assisting them in what they're saying, making sure that it's regularized, industrialized, and that's been very interesting for me as well. That happened when the market fell. It was actually, again, Martin at KCB who found me at the Serena, and he said, don't talk to me about PR, come and talk to me about how I get the share price up. And I realized there was an opportunity there. And we've also got a digital media business, which was more around, somebody came in my office in 2009 and said, this is going to be big, just get on it. And we did, and he was right, and I'm glad he put me on it. And we've found that that has been probably off the lowest base, but the fastest growing component of the business. And then there is some sort of, I would call, transactional business. So those are the 4 components. I want to do a fund. I've been dithering about it. I need to do it soon. And I'm looking at opportunities to do that, whether it's with the NSC or how we go about doing that. But my background really is sort of interest rate trading and macro trading. I try to look for about 5 or 6 opportunities a year where I think the payback is going to be extremely dramatic, where I think the market has got it wrong. And then beyond that, of course, I'm looking at our East African markets. I hope that answers the question. With respect to fixed income markets, I think that new bond that's coming out at an 11% coupon is going to be massively oversubscribed in my view. I think interest rates, by the way, are coming lower. I think the move in the oil market, people really haven't captured how big and dramatic it is and what a big impact it's going to have, particularly on oil importing countries, which we still are until a few years in the future. But I think the fixed income market is going to grow by leaps and bounds, because if you look at the arbitrage between let's say the 10-year euro bond, which is paying you around 6% or whatever, versus an equivalent bond here, which is paying you 4% or 5 percentage points more, and you think to yourself, I can do a little bit of a hedge here and I can lock in a significantly better rate of return. And I think that sort of thinking is happening across the world at the moment. And before, people in the world would be reluctant to dive into local bond markets in sub-Saharan Africa, but all of a sudden I think we've popped over the radar. I think the Eurobonds helped us do that. They gave us a sort of an affirmation, global affirmation, which is leading that charge in. So I think you'll see much more demand. The government, however, I think in the next 12 to 18 months will not be borrowing at the same quantum that they had previously been borrowing in the local bond market, which I think is going to set up an interesting supply-demand dynamic as well. I hope that answers your question.
Hi,
David.
David Kitheka, KCB. For me, it's just an interesting scenario where we're in. And my question is, where do you think we're going to go, especially with the regulator and the regulators, especially to enable the discussion you've had today? Yeah. We need to move to a new level where the rest of the world is moving. And today, Kenya is still a few steps behind, let me not say many steps behind.
In particular, where do you think we're behind?
In the kind of, we're having this chat with
speed of regulatory approval.
The speed of regulatory approval and even the diversity of the kind of products that we bring onto the market. How soon and what do you think will actually catalyze that change so that we can be able to do more.
Yeah.
And especially the people in this room will definitely be interested in doing more. But then the times when you find it's that regulatory framework that's actually holding you back from doing what you'd like to do.
I think that's a fair point, and really you're asking, how long can the regulator be a brake on all these great ideas that we're trying to exploit? And I think it's not possible for the regulator to have its foot on the brake as it has done. I think the regulator was coming out of an environment when we were trying to fix, we were trying to mend, we were trying to resuscitate a patient that had gotten a little bit ill. 2007, 2008. So I think the bias of a regulator was not to take risks at that time, was to do things like make sure the stock exchange was demutualized. And I think we're now moving to a more aggressive posture where we can see that our brothers down south are trying to eat up our currency futures by opening up a currency. That's not good, right, in my opinion. And if I look philosophically at the world, and I was remembering Ali Mazrui yesterday because he passed away and what a great scholar he was, and I went back to listen to some of his documentaries, and he was talking about value addition. And he was talking, I think, about coffee. But value addition is also to do with our capital markets. The real value addition is in having these derivatives exchanges, in creating warehouses where our farmers can put their goods if they don't like the price that there is right now at a wholesale price, and then sell it 3 months later when they know they got a better margin. That is value addition. So I completely, David, agree with you. I think it is in the national interest. And sometimes we forget what is our national interest because we're all working at different things. But it is in our national interest to have this financial architecture here, to have the trades being conducted in Nairobi, to have everything happening here. And I don't see any reason why that's not going to happen. And I think, when I get the opportunity again to get up close and personal, like I was mentioning, and I was speaking to Paul when at the NSE listing, and I see much more of a green light now. I think we've switched from amber to green. I think, Terry was mentioning ETFs, he was mentioning REITs. Sometimes you hear about things and they take a long time coming, but they are coming. And I think that to me is the big step forward. And I'm confident actually that, we have financially literate human capital in this country. I mean, I go to other African countries and I don't find this degree of financial literacy. But then we can't rest on our laurels. We're ahead. Let's get more ahead. Let's just move forward. So I'm extremely excited, and I think we're not really speaking about rocket science. We're not inventing anything. We're not reinventing. We're just trying to do stuff that other people are doing that have already been tried and tested. So I don't see it as necessarily an enormous challenge, and I sense we're going to change gear and start to speed up a little bit.
I was in a forum probably a month ago, and Polycarp Igate raised this issue about the industry in the country all struggling with their regulators. So around the same time, of course, we had an issue with CMA, Safaricom, and think was having an issue with their regulator, and somebody else. Everyone was having an issue with the regulator. For me, I think the merger will be a game changer.
The merger
of the financial regulator. Of course, it depends on who the leadership will be. But I think, as also the analyst fraternity, it's important to call the bluff on the regulators. So the same way you do coverage around corporates, it's important to say something about the regulators as well, and the pressure. If we are all exerting the pressure, they are then forced to up their game as well, because they are a service provider, and we need to keep exerting the pressure, and this thing of approvals taking more than 6 months and that kind of thing, that has to stop. So we need to keep exerting the pressure, and it needs to come from all quarters and all angles.
That's a valid point, and I think we should also look at this as an opportunity for us to gather together and exert pressure where we feel that we can do it. And I think we could just as well set ourselves up as as a financial markets lobby group with, you know, who are really genuinely interested in having it work better.
Hi, Ali.
Hi.
My name is Belgrade, like the city of Belgrade, from AIB Capital.
Nice to meet you.
Nice to meet you. I have two questions. The first one is with regards to data. You mentioned the importance of information in our age. And there's a trend across African exchange whereby we see most stock market trying to sell data, whereas we need this data to boost market efficiency. I don't know, from your opinion, whether making available data to the whole public would probably be a better way of addressing market inefficiency.
You know, I completely agree with you, and that's why on my website, if you register, it's free. You know, I made a decision that I, like yourself, believe in the information century and believe that people should have as much information as they can at their fingertips. I think you're referring probably to backdated data, to sort of data going back, which I'm going to take up as a side discussion with Godfrey and see how we can work on that as well. But absolutely, I think, you know, we have more than 2 million shareholders at the Nairobi Securities Exchange. That, as a percentage of a population, is higher than anywhere else in Africa. It is practically a tribe of its very own. And therefore, I agree with you that we have a special duty to this tribe, who are, at the end of the day, entrepreneurial, they are motivated, and they're all trying to make a better life for themselves. And that's what I like to see about people. So I agree with you that we should look at this, and I'd be happy to continue this conversation and listen to what ideas you might have as to how we can. I think it's also about packaging and delivering that data in a morsel that fits people, that works for people. And I think, you know, we've thought about many different ways of delivering that, and I'd be happy to extend that conversation with you if you have some particular ideas you'd like to share.
Thank you. Well, the second question is more of a challenge we've been faced with internally. We realize that unlike institutional investors, the retail investors are momentum driven and sometimes very sensitive to noise trading. And oftentimes the analyst report is typically made on, it focuses on the fundamentals. And we've been wondering how to address this, you know.
The momentum side of things.
The momentum side.
I think there's a niche there to be exploited, because in my experience, momentum has a big part of the component of returns here at the stock exchange. I mean, for example, if you look at things like Britam, for example, it's been a momentum trade to me for the last few months. I mean, you know, it busts through all my PE ratios where I thought it was fair value. So, you know, it's gone through all my sort of systemic analysis, and it's really been driven on, in my opinion, by momentum. I think you are completely right. I think there's a big opportunity. There are a couple of people who tried to sort of do some momentum-driven analysis that I find, and it's proven quite useful. But absolutely, and I think that is a whole area to look at in terms of the securities exchange, is the impact of momentum on the securities exchange. And I think that would be a very interesting area of specialization, because I think it has been a key component of many moves, and particularly this year, the most extreme of which, of course, has been Kenya Orchards. But then we can try and explain, someone can explain that to me today, so that I can go and act very clever by the end of the day. But I'd like to know what the heck is going on in that, which is up something like 4,000%. But agreed, absolutely agreed, important component. And I think much more important component here than in many other places. And what typically happens then with retail investors, they jump on that momentum very late, and then they get left high. I mean, somebody was complaining to me yesterday saying, somebody bought CFC at 900. I don't know if you remember that time, it went all the way to 900. But that was, again, people piling in on a momentum move without considering where it could really come back to.
So I take this opportunity to appreciate you for the great presentation.
Thank you.
Awesome. My name is Joel from Cooperative Bank. Mine is a comment on the stock market, the securities market. You've just mentioned that in Kenya we have over 2 million people patronizing the various securities at the securities exchange. And I was wondering, how is this compared to the population in Kenya? that is maybe patronizing other products from banks and from insurance. Taking an example of Cooperative Bank, where we have over 4.7 million customers, the 2 million would be roughly half of that number. Now, that is not the largest bank in Kenya. We have several others that have got a wider clientele. Now, I'm asking myself, is it that we are not working hard as possible as the Nairobi Securities Exchange to ensure that the market penetration of these products that we are so much trying to sell at the market is, the uptake is good enough? Is it that maybe we are not tapping on the market potential, like maybe the people, the various students at maybe universities, the colleges, at various employment centers? What is it that we can do so that we can increase the exposure? Then part B of the question is, there could be other markets out there in the society, in the world, that could be maybe performing much better, whereby the exposure maybe could be much better than Kenya. What is it that we can do that we could term as a game changer for us?
Interesting. I think if I go back in a generic point, you know, a lot of the shareholders that came to the Securities Exchange came via the privatization program during the Kibaki administration. And, you know, something like Safaricom probably brought about 500,000 or 600,000 shareholders to the party, right? So my first thing about the stock market, it's particularly with retail investors, and is my theory. I saw this with Mrs. Thatcher in the UK. Britain was an underperforming economy, all these parastatals, British Telecom, British Gas, losing money. And she just came in and said, right, what we're going to do is sell them all off. And she started to sell them all off. Now, the first thing you have to do when you're doing a sell-off program like that is make sure your shareholder, the retail investor, makes money, right? Why did our stock market slow down post-Safaricom? Was because it spent so much time below the issue price. It locked up money. People were not happy taking losses. Of course, they've now had enormous gains, right? But that period, so that's why I got very excited when the NSE came out, because I thought that was a perfectly priced IPO. People made money, it was oversubscribed, you reignited the feel-good factor. For the retail investor, I think we have to get that feel-good factor going. First issue is pricing. And that's why I think, you know, whenever, as a stock exchange, I think the stock exchange has got to interrogate the pricing. We don't want people coming to the market at too high a price, leaving people stuck high and dry. It slows the whole thing down. The pipeline gets blocked up. We want that water to be flowing. So I think from my perspective, and I think it's important, because if you look at the amount of issuance that we've got to have in the next 5 years, if all our economic forecasting is correct, and I got no reason for it not to believe it, then, you know, we're going to have massive, massive issues that need to be offloaded at the stock exchange. Key thing is the pricing. In terms of accessing and, you know, selling more product into your customer base, I think, you know, the retail, first of all, retail versus institutional is a very different animal, like my colleague there was mentioning, and you've got to treat them slightly differently. And I think with the retail, we have a slightly higher duty of care. You know, we've got to be quite careful about how we encourage them, into what we encourage them, and make sure, you know, for example, a lot of people borrowed a lot of money, then went underwater, they took those hits. You know, we've got to understand the dynamics of what took them away from the stock market. You can imagine if you'd borrowed a lot of money, you'd bought this, you're underwater, you're paying interest charges, really your economic well-being was suffering, particularly because everyone took on more than they really could. If you could afford 50,000, you were buying 200,000 thinking, I'm going to end up with 50 and I'm going to have sold off 150. So everyone got a little bit too excited at the top of the market, which is what always happens. So I would address, I think, you know, addressing the retail investor, it's a different addressable market, and it's got to be addressed in totality. And I think if you are the banker to a lot of these guys, you have a clear idea. You're judging how much you can lend them on unsecured lending. You can also advise them on how much they should be prepared to invest in various things. And I think that's where the bank has an opportunity to hold the retail investor by the hand, and at the same time apply sort of basic metrics to that customer that you are seeing coming through your door, And I think that in the long run will also improve the relationship. In terms of penetration of other products, insurance, I mean, hello, every day I open the paper, someone's buying an insurance company. What's going on? It's exactly because of the point you're making. Tremendously low penetration, a bit of a land grab going on. That's why people are piling in there. So I think when you look at those sorts of things, there's only growth coming our way. How do you go and exploit that is a challenge that you have to work out internally. But I am convinced, you know, we're in a nice sweet spot now. As long as we don't try and dump a big IPO at the wrong price, I think this thing is going to get going. And also to complement, the president is extremely financially literate as well, coming out of his background. You know, whenever I've spoken or others I've listened, you know, this is somebody, we're not selling something to him that he does not understand. He understands what I think it takes to make it work, and I think that's also helpful as well.
But remember also, all these CIS products coming out really is for the banks to structure. It's really for the banks to structure products around it. Because again, our relationship with our money as retail investors is really with the trust we have in the banks. And so it's up to the banks to now pick up these new CIS products coming out and just structure them for their clients. Who knows that we could be seeing better returns on your deposits just because the bank has offered you a different structure product than the usual 2% or whatever deposit they give you guys. So I think the banks should be the first people to run with the CIS products. Really, the other guys, there's no reason why they should be doing this.
I agree, and I think that's a unique aspect of the financial landscape that we operate in, and that's why I was talking about this duty of care. You know, I just remember when Safaricom came out and all the banks were lending money. I think in that sort of situation, we've got to look back at how we operated at that time and think, can we operate slightly differently? And I think in a way, you know, if you are a banker to a retail investor, whether they have $1,000 or $1 million, really it's the same type of relationship that you need to build, that you would build for the $1 million guy. You've got to build for the $1,000 guy. Maybe the $1,000 guy can't do as many things as the $1 million guy can do, but at the same time, you know, the $1,000 guy's got to think in the same way that $1 million guy is thinking. And I think ultimately the bank has got to think in the same way and work out, how do we deliver a very similar thing to this person? How do we have this responsibility, and how do we nurture this relationship? Because it's those $1,000 guys which will become the $1 million guys later on.
Thank you, Alikan, for the wonderful presentation. My name is Bernard from Fide Investment Bank.
Hi, Bernard.
Hi. I have two questions. One is with regard to corporate governance. Do you feel as if corporate governance has improved for the listed companies, or are we taking steps backwards? The second question is with regard to the securities market and its efficiency in terms of pricing in new information. Do you think there's still a lag in terms of assimilating new information on the prices, or is it efficient with live assimilation capabilities? Thank you.
A great question. So first question about corporate governance, this is what I was talking about, bifurcation. I think when I walk into someone like KCB or Safaricom, corporate governance is very different and it's held to a very different level. You know, Joshua is sitting there and he's comparing himself to, you know, other banks on the African continent. He's trying to hold himself to a standard. So the moment they know he sits down there, this is a man whose word we can take. This is a man who's going to give us information that is going to be useful to us, what the governance structure will find will be the same we would find anywhere else in the world. And that's the same case with Safaricom and a number of others, EABL, for example. But I think what I was talking about when I said this bifurcation, I think there's a big gap then between these companies which are holding themselves to that standard and others which are just either are not holding themselves to the right standard, are not even aware of what that right standard might be, right? Because no one has gone in there to tell them. That is another opportunity, by the way, as to how to optimize and educate boards across the board in Kenya, I think. And I'm increasingly seeing people with this sort of business idea. And I think the question is, then how do you improve that? And then as an investor, obviously there's a lot of money to be made if you get in there before they improve it, and then they improve it, and suddenly, you know, you're seeing this dramatic improvement. And that's quite often a place to be as an opportunity. So I think there is a big difference, and I think that's seen in the quality of reporting. It's seen in the type of information that a top company will give out versus somebody else that won't. I mean, yesterday I got a report from Olympia Capital, which was like a one-page photocopy or a two-page thing. Compare it to something like KCB, which is going to be 25 pages, presentations. I'll be able to know what cost-to-income ratio is and what is this and what is that. Whereas with Olympia yesterday, all I learned was 500 million going to be spent here, but I did not get a clear feel of what was going on in that company. And that's why you saw that extraordinary price action yesterday when your shares traded at 250, its shares traded at 7. That is scientific market reaction to a lack of certainty and a two-page document no one really knew what was going on with, right? So you can see, if you want to analyze something, say to yourself, my God, my goodness, that price behavior and reaction was exactly because these guys were not giving us the type of information that we needed. So you had some people thinking, my God, sell it, get me out of here. Other people thinking, I'll buy it. So I think that was an interesting series of events yesterday to show how, if you're not giving out the right stuff, you know, your share price is going to go wild because people just don't know. So are we in an inefficient information marketplace? Is the market absorbing the information? It doesn't absorb it straight away. And in fact, the big opportunity for traders is in that period of time where it does not assimilate very quickly. That's why you get these very dramatic moves on the release day, and on the next day you'll get some pretty. The drama of the move is informing you that the information is not yet efficient. But that is also the opportunity, right? That when I'm talking about actionable intelligence, I'm talking about, you know, sometimes you can see through something and say to yourself, actually, this is what this means. You can put out your note and say, this is what I think this means, and you can often make a lot of money off the back of that, I think. Very interesting, I must admit. Thank you.
You talked about the momentum factors as we look into our stock market, especially. In your view, what's the biggest contributor in the alpha? Is it the momentum or the fundamentals?
I think, you know, the periods when our markets, particularly when it gets more bullish, becomes very momentum driven. This year, if you looked at it, you know, if you traded more on a momentum basis and not looked at fundamentals, because quite often it was difficult to know, you would have picked up Kenya Orchards at something like 10, 15 bob and said, heck, there's a lot of momentum here. You would have picked up some of these other stocks, because the other interesting thing this year has been small cap performance, actually. There's been tremendous performance in the small cap sector. I've got to admit, I was caught napping, because, you know, you just, all of a sudden we've had these surges. 3-4 years ago I'd done my analysis and thought to myself, it's got to happen, then it doesn't happen, so you ignore it, and then it does happen and you miss it. But I think, you know, at the end of the day, I prefer to be a fundamental investor, because I prefer to know that I'm not going to get left high and dry somewhere because I just haven't moved quickly enough. And, you know, I did law. I've seen concert party operations where you get a lot of momentum build up because people are allocating capital efficiently and moving it around. So I tend to look for a fundamental story. And bear in mind that at the end of the day, if you've got a fundamental story and something isn't going right, you've got something to back up what you're talking about. Whereas if you ask people to pile in on momentum on something and all of a sudden it's stuck up, it's come way down, you know, it's a difficult sell to go and say, well, it was a momentum trade and I got the momentum wrong. People, you know, when they're nursing losses, they're not that keen on hearing about that, in my experience. They'll take the gains, but when the losses come, they're not going to be happy. If I can, at this point, first of all, thank everybody. It was really interesting. It's lots of things which I don't necessarily think about all the time, and I really enjoyed it. I hope, Godfrey, we'll try and do something with this group of people, because I think there's a lot of potential in it. Lots of ideas came out, and I'd like to, first of all, thank the NSE who've been friends of mine for many years, Terry, Godfrey, Donald, unfortunately, was not able to be here, for the support. And just say, you know, we wish you, all of us, because we are also invested in you, in your success. And I would like to come back and finish off my conversation with you. And I'm really excited about what you've just told us. Can I leave the floor to you, please, Terry?
Thank you, everyone. There was an interesting question about selling data. At least now we are a listed firm. It becomes an easier conversation to have. So we'll probably sell a bit more. Our shareholders require us to make some bit of money for them. Thank you very much for joining us today. We again are hoping that this conversation between analysts can continue. There are a number of things we need to push. As Ali said, the kind of reports that are coming out from the listed companies, would like to standardize that, would like to standardize when they are reporting, you know, that it's important, I think, in an efficient market that people can project reporting dates and the kind of reports that are coming out. So we are pushing for that. We are pushing for that. We will definitely have continuous conversations about that. I know also there is, I was in South Africa last week, and there's a conversation around the South African market about rating of analysts. And I think Thomson Reuters or Bloomberg, I'm not sure, are actually rating analysts now. So you have the opportunity, for those of you who have those portals, to put yourself out for rating. As Ali said, it's all about your brand, and you know, you get picked up. You get picked up. You get a 5-star rating or whatever rating, and people know I need to follow this guy, and it's irrespective of where you're working. So those things are coming into this market. The days where we used to say we are not yet there, I think long gone. There's a lot of interest in this market. Of course, from my visits last week, the South African market is not doing very well. The rand has gotten quite a big hitting, and so has the index. And so a lot of all these Africa trading desks are looking into the region. You know, we have players like ICAP who are keen on, well, they play this market, but they would like to ramp up what they're doing in this market. So stuff is happening. Stuff is happening. Of course, you're critical as analysts to this phase, and we are keen on the reports that you're getting out, that you're putting out, and we are happy to support you. We are also happy to have further discussions on the stuff that we are doing, and just push in your request. We are happy to meet you and just explain, you know, when we're talking about REITs, when you're talking about ETFs and the REITs and all these things we are trying to do, what do they mean and that kind of thing. So we'll try and have more of these sessions to just talk through a number of these things. Thank you very much, and hope you have a good day. Asante.